Hey traders, this is Christian from Tribeca Trade Group, and this is your weekend video. So we're going to cover a bunch of things last week. What a crazy week we had last week. A lot of areas participated and rallied pretty hard globally, not just domestically. So we're going to talk a little bit about that. We're going to talk about a little bit of market sentiment and if we kind of went up a little bit too far too fast and how to tackle that for this week. And then we're going to talk about some trade ideas, maybe some areas that didn't participate. They may have some still have some legs to run on, and so I've got a couple opportunities to look at there. So let's just dig in first to the charts, and then we'll go from there. So first things first. Well, let's look at the performance first, and then we'll go over to that. For last week, right? S&P up 2%, really, really strong. The Qs were up 3.3%, and again, very, very strong. And nice to see the Qs really come back quickly after a couple weeks of lagging a little bit and really lackluster price action. Emerging markets up 4.7%. So again, if you were just looking at U.S. names, you kind of missed a huge rally that took place over in international markets, especially emerging markets. So I'm going to spend some time on that as well. Bonds last week were down just a little bit, and gold was actually pretty well bid. So I'll talk a little bit about gold as well and an opportunity in that space as well, or possible opportunity, I should say. Okay, so now that's the performance. Let's just go through the S&P chart. And I'm not going to spend too much time here other than, hey, we've got, another leg higher here. Sure, this to me looks like we're in overbought territory again, right? So the way that you want to kind of think about this, and I use the RSI to kind of gauge whether or not the indices are overbought. Sure, we're overbought, and we've been overbought for most of several times in 2017, and this has kind of lasted a while. So really, what the takeaway from this is do you want to be adding a lot of risk to where we're really overbought and have had a huge run? Not for me, not necessarily. I want to stay the course and this is a big distinguishing difference is for my cash positions, right? I have a long cash trend portfolio where I really don't take much risk off until something reaches a stop, right? Because we don't know how long the trend is going to last. Nobody knows how long the trend is going to last. I don't make predictions and I don't make market calls. I basically am just looking to follow the trend, and I'm looking to make observances where I can profit from. Look at really nice setups. But I don't know how long this trend is going to last. So from my cash positions, I'm going to stay the course. What's nice about using moving averages as trailing stops is if they're all grinding higher, they're going to increase, and they're going to be your trailing stop is going to increase as the moving average increases as well. So you can certainly, if you had a 50-day moving average, you can certainly ratchet that up to, let's say, a faster moving average to a 20-day moving average. So that's what I'm doing in my cash portfolio. Putting those things, some areas where I got in on the 50-day or on the 200-day moving average, I can put that stop now at, let's say, the 20-day moving average. Or if I really want a tight stop, maybe the 5-day moving average, which is the yellow line on my charts. The blue line is the 20. Now, for option positions, it's a little bit different. Option positions, especially, let's say, if you're in February or March option positions, yeah, you want to take some targets, right? Because those are pretty volatile positions. The short, it's different if you have leaps, but if you've got February or March option contracts, those are really going to move. So if we take a little bit of a step back, and again, markets don't go up in a perfect straight line. It just doesn't happen that way for a long, for the most part. So taking profits and kind of letting that last third of your position or that last piece of your position run, that's what I'm doing on a lot of positions that I have. But a lot of those, after that huge week that we had last week, I think it's worthwhile to bank some of those positions and, kind of wait for a pullback, rinse, put your positions back on, and just rinse and repeat for options. So I'll get into some individual names. I'm talking pretty broadly right now. Our chart of the week last week that was in the newsletter was the Qs. Notice, the pattern recognition here is that Qs have been in a really nice uptrend, and they've had some really nice dips to get back involved in. So, right now we're extended again, but look at what we've done, every time. And I don't like to spend a lot of time rehashing what has already occurred, but it just has given us a really good signal. And why I went long the Qs for a trade last week was because we recognized this pattern of a small dip in an uptrend, and I want to keep doing this as long as it works. So mission accomplished, right? We broke this trend line, and now we've gone up significantly from there. I've taken that trade off. So really nice move, really nice profits. But again, in the major averages. All right, so that's kind of my feel for the major averages. IWM, we could also look at. IWM lagged a little bit, really didn't have, still was up about 0.75% last week. It just really didn't take that next leg higher. Maybe it does this week. Something to watch, though, because IWM is a really good indicator for me. I feel like small caps often lead the move. So if they start to turn down next week, again, maybe that reinforces your opinion in your option portfolio to maybe take some more profits. All right, so let's go through, I just like to look at performance just quickly. This is in our newsletter. So I should bring this up here. What performed well, what didn't last week. Basically, if you look at the top first and you look at groups or sector performers, I've got the Chinese internets in there. Obviously, they're not a U.S. sector, but they are a particular group, and they were up 8.2%. So just kind of reinforces that all the major trends that I see, and I could talk about a couple of them, but the Chinese internets were the best performing group that I had anyway, which were up 70% 2017, and they just continued. So they were up 8.2%. So I think a lot of people, I think there's a lot of over analyzing. Once we get to the end of the year, people like to make predictions and so forth. I really didn't do any of that. I just said, hey, these trends are intact. KWeb, the Chinese Internet ETF, had a little bit of a dip for a while. It retook the 50-day moving average, and that was your signal to go long. So the best performer in 2017 is the best performer in 2018 so far. So the strength is still with that group. That's what that tells me. Other groups that outperformed, there was a lot of them. The semis were up 4.3%. Oil and oil services, as well as the energy ETF. Look at OIH, was up 7.6%. It was almost double. That is double XLE. So there was really stronger pockets than just some of the bigger names in energy. Really nice outperformance in some of those names. Again, the whole ETF, OIH, was up 7.6%. Steel was up 6%. Robotics came back to life. They were up 5%. I'm long Robo in my IRA. I'm long bots in the TTG cash trend portfolio. Really nice. But you can see the home builders were up 3%. Tech was up 3.1%. The FANG stocks were up 3.1% as a group. Solar was up. So what didn't perform? It was basically straight risk on, right? Those risk off securities, utilities, REITs, telecom stocks, those were actually down last week. So there was some separation, and there was some things that did not participate, which again makes perfect sense to me, considering where the money went into, and it firmly you could classify last week as risk on. All right, in international ETFs, a couple things that I want to point out here. Russia RSX, best performer last week. That's different than what we saw in 2017. This is one of my kind of go-to areas or contrarian trades of 2018. Russia was one of believe the worst performing country, individual country last year in 2017, was the best performer last week. So, I think a lot of upside. I think in emerging markets, which I'm going to get into, I think a lot of upside potential that it has. And take a look at this RSX ETF. It's been in a downtrend for a while, basing, and now starting to just barely move above this resistance. Again, I think a lot of opportunity in the Russia ETF, especially there's a lot of oil and gas names in this ETF, and as oil moves higher, I think this ETF could be a good way to play that move in the commodities. What else? You're going to see a lot of emerging markets on here. So let me dig into that. Notice again, on this list, I have a list of about 54 names that are international countries as well as areas, and not one of them was negative last week. So it just tells you full participation. I think it's really rare. I think it's nice because it shows that there is very, very broad growth in this market, but maybe a little bit too much, too fast last week. So again, I think bigger picture, great to see so many areas of the world performing and participating, but short term, maybe a time to kind of say, hey, let's just wait for things to kind of cool down a little bit if you're looking to add new positions, right? Okay, so that's the takeaway from that. Before I get into emerging markets and go into those charts, I just want to talk a little bit about fund flows last week. Let's just talk about what was most interesting and sectors. Look at the sector flows. Again, just goes right back to what I was saying about risk on last week. Big rotation out of consumer staples, almost 1-for-1 out of consumer staples and into industrials. Again, there's a lot of other parties that are involved, so it's not exactly 1-for-1. There could have been another fund that went into industrials, but it looks like one particular fund really went out of consumer staples and into industrials. So what does this mean for you? It means if you're in names like Boeing, if you noticed what happened in Boeing last week, we bring up the chart of BA, just exploded higher last week. Part of that, my opinion, is that this big shift into this industrial ETF, XLI, Boeing is the biggest weight in the industrials ETF, so therefore it got pushed. Remember what I used to do as an ETF market maker when there was a big order, like a $1 billion order. I would not just be trading the ETF, I would be trading the underlying basket to facilitate that type of order, to source liquidity. So Boeing and a bunch of other industrial names really got pushed last week, and here's what the inflows look like. Every day they saw inflows, the volume. Again, this is something that you can't really track in equities, right? A lot of people look at 13F filings to see who took stakes, and that's really delayed. It takes 90 days for that to come out. In ETFs, I can find this information out the next day. I'm not using some type of algorithm or anything like that, or making conclusions about what's the one indicator. I think balance on volume. No, this is just straight. This is reported every day through creations and redemptions. So this is money going in. Vice versa, where did that money come out of? Consumer staples, right? So I personally would not really be adding too much money into the industrial space until things kind of cool off a little bit, until we know that that buying is stopped and maybe it'll come in a little bit. Vice versa in consumer staples. Look at the money that came out here, kind of held them back. No rally out of consumer staples last week. Maybe take a look at Pepsi last week that didn't perform, and possibly because there was heavy selling going on in that whole consumer staples space. So Pepsi, why I'm turning to that one is because we've seen repeat call buying that's gone up. So I like this name, and I like it as a name that did not participate because of that big selling that happened in the XLP ETF. All right, so that's one setup for next week that I like is long Pepsi. I'm already long it, but something for you to maybe watch for a breakout over 120. Besides that, just to kind of look at the rest, and I don't want to not give this full attention, but look at the amount of inflows that went into healthcare. $954 million. We have not seen that in a long time. Big inflows, but for the most part, healthcare and biotech ETFs for the last couple of months have been seeing outflows. So a lot of money going back in, and again, kind of gets overlooked a little bit because of that big industrials inflow. But also, besides healthcare, look at energy, adding $950 million. So almost $1 billion in inflows there as well in energy and healthcare, and energy has actually been leading the inflows for 3 weeks now. Again, not looking at this, forgetting about this industrial big inflow last week. It's really energy has been seeing now consistent inflows. Tech also had about $500 million of inflows. So did materials. Materials absolutely breaking out as well. We'll just look at a couple of these charts. There's 2 ETFs to kind of note that saw some big inflows last week. XLB is one of them, and I can actually look at this on Bloomberg because that will show you the actual inflows. XLB. So you can see it actually had an outflow on Friday, but you can see the inflows in the beginning of the week really were a lot bigger than Friday's outflow. And then the other one, I think it's RTM, equal weight materials. Take a look at this one. Big inflows last week, every day last week. This is, again, an ETF probably off people's radar. I believe this is the Guggenheim equally weighted materials ETF. So really big money moving into that. That's the biggest inflows that we've seen, on the chart that I have here. So really strong. One other area which I almost forgot, but the pot ETF. So this, they call it the Harvest ETF. I do want to mention this one. Take a look at the money. So what this fund did is they changed the scope of the ETF. I believe it was a Latin American ETF. They changed the ticker. They didn't have to bring out a whole new ETF. What they did was they just changed the scope of what they had. And look at the money that went into this ETF last week. Have fund flows up for the week. And, I'll give you the raw numbers behind this. So we did a deep dive earlier in the week, and that's been given to Tribeca Trade Group subscribers, but $244 million going into that ETF. That's the second biggest all time for an ETF in terms of 1 week inflows into a new ETF, with GLD being the one that is on top of the leaderboard. When that ETF debuted, it brought in $1 billion of assets. So this MJX, believe it or not, the Harvest ETF or the pot ETF, if you want to call it that, the second biggest launch ever. So kind of says something, right? A lot of money being added to that last week, and the performance certainly pushed the performance of that group of stocks. Just so you know what's in here. Again, I'm not going to spend too much time on this because I've already done that, and I've done that for Trade Group subscribers. But MJX, if we go to MHD, you can see that it's a lot of Canadian names. A lot of those Canadian names, they do have ADRs as well, or U.S. listed names. But here's what this looks like in terms of components. And a lot of these names really took off last week. Okay, so that is U.S. What didn't have inflows, again, consumer staples and utilities also had a big outflow, $430 million. Okay, so here's where it gets even more interesting. If you look at the international flows, you can see that emerging markets had $2.1 billion. That breaks a streak of 11 straight weeks where international developed markets led international flows consecutively. 10 weeks in a row they led, and 11 weeks in a row they led. So emerging markets, $2.1 billion going in there, and it wasn't just IEMG and EEM. It was also some bonds that really saw some big inflows as well. I think the EMB, Emerging Market Bond ETF, brought in $887 million last week. So that's a pretty interesting look. Instead of, if you're looking for something with higher yield, I think it yields about 3.2%. And you can see what the inflows look like here on the chart. Pretty big inflows, right? Remember back on the election time, all those outflows and a big dip into the emerging market bonds? What a big buying opportunity that was. And since then, that was the low point. Right now, it's at a 52-week high. So again, not something that I would want to maybe get into right this second. Maybe wait for a little bit of a pullback, or maybe a little bit of a reversion after all that money has been added into the ETF. Also, I would say, I talked about Russia for a minute. That also saw a $91 million inflow. And developed markets, while emerging market did surpass developing just this week, they still added $1.5 billion. So there's no real slowdown there. Also, Japan saw $457 million go into there. So that's also above average flows for there. All right, so that's the fund flows. And again, just good to see where the money went into. So let me talk a little bit what I think is the chart of the week. Let's see if I still have this up. I don't. So I think it's in the beginning of the newsletter. There we go. Yeah, so take a look. Emerging markets. Just to put this in perspective, if you chart emerging markets, and why I have it as the chart of the week, is because emerging markets really outperformed the U.S. last week, and if you look at the long-term trend, you could see that emerging markets are still relatively cheap to U.S. markets, and that's why I'm overweight these areas of the market. They did outperform, and emerging markets did outperform SPY and U.S. markets in 2017. But I think it's just in the beginning of stages, and you could see, if I can bring this up and show you the longer trend, that this happens. It seems that this trend happens for years at a clip. It doesn't seem to go from 1 year to a year. So if we go back and look at maximum, you could see this for a while. Emerging markets outperformed SPY from about 2003 to 2010, and then you could see from 2000, right at the start of 2011, all the way down to basically 2015. U.S. markets outperformed S&P. So look at this base, and it kind of looks like it's trying to turn the corner here. An emerging market, like I said, led for 2017, led last week. And let's see if we can have continued outperformance in there. And again, I am overweight the emerging markets, and not just EM. I've got some China positions on. I've got the Russia ETF. I've got a Singapore ETF on. So I'm definitely overweight this particular group, and looking for for the trend of outperformance EM over SPY to continue. All right, so a couple other charts to go through, and then we'll talk about some aggressive option activity. But I think this is a really compelling trade right now, this particular sector. So what I'm looking for at this point, as we've seen a lot of those groups like industrials, materials, steel names, energy, which I'll talk about in a second as well, they've really been the outperformers so far, I'd say over the last couple of weeks to a month. I'm looking for a couple groups that are just starting to get going. The first one that I see is healthcare, XLV. I think this gets overlooked a lot. People are always looking at the biotechs. You see that on Twitter a lot. People are looking at XBI, looking at IBB. I think you've got a pure breakout going on, and to show you what those charts look like. XBI had a real nice week, or put together a couple weeks of outperformance, but stalled right at the 2017 high back in October. So they could still get going, but I think for now what you want to watch is 88.63. But what's nice about XLV is that the options, if you're an options trader, the implied volatility is so much cheaper than XBI. It's about if just looking at, for example, February options, the implied volatility is about a 12, versus in XBI it's a 22. So this is an easier trade, in my opinion, and it's breaking out. I think a lot of people, they don't, for whatever reason, they just don't go towards the easier trades. So again, I say easy because the implied volatility, the price of the options, is so much less in XLV than it is in XBI. So I think it sets up for good risk to return. Now that it's taking that leg higher, you could see also a MACD crossover. Another group to watch for next week, the financials. They start to report towards the end of next week. You've got JP Morgan. Let me bring this up. I don't think we need this chart anymore. Go to events for next week, and if I look at just earnings release, you can see BlackRock, PNC, JP Morgan, Wells Fargo. They all report towards the end of the week. That's on the 12th, all before the open. So if you're looking for maybe this group to run into earnings, we certainly did see some call buying, but they just did not have the momentum. They got out of this sideways range on Thursday and kind of stalled. They just didn't have it. So that's an area that I'm watching. Again, we saw call buying, the usual stuff in BAC where it's very short dated, momentum type. Citigroup, we saw a nice block of calls go up. We saw a little bit of XLF calls as well. and we saw some repeat activity in Wells Fargo. So I like the XLF chart as long as it can maintain above this 2823 top of value. I also like Citigroup, which, like I said, saw call buying and is now above this downward trend line. It does need to fire off an MACD crossover for confirmation purposes. Not there yet, so something to keep an eye on for next week. Again, looking for things that really did not participate last week, and that are not overbought. All right, so that's just a couple names to kind of to reference. I've got a couple other things to watch, but I know this video is we're at 25 minutes. So let me let me go through. Again, a lot of stuff to go over, right? It's tough to just kind of put together a 5 or 10 minute video. All right, so some option activity to watch, and I've got this list that I put together every week. It's a big list. It's probably a bigger list than normal. I try to keep the watch list something down to so that you can manage, right? I do not tweet out every single time that there's an aggressive call buyer in something. You just can't participate in every single name. So you have to kind of whittle down the list. I do keep a bigger list than this because I am looking for repeat activity. It's, if we see something for a small trade that goes up aggressively and it's a $20,000 trade, it's like, all right, I'm not going to follow a name personally that is that small of an order. But if they come in 5 more times in that particular name, that's of interest, right? That's accumulation that's happening. So I do to pay attention to all the aggressive action out there, but I'm just not going to tweet about every single little thing. I think personally that's confusing as hell to people to kind of tweet about every single thing because you can't put on. You're not a fund, unless you're a fund who's got 20 people, that are under you and can kind of handle all of this. You just can't put on a position in everything that sees aggressive call activity. All right. So that said, again, this is still, I think, a pretty big watch list. But I've broken it out in terms of sectors, which is what I do every week, just to kind of see the sentiment in one group versus the other. If a whole bunch of names are firing off call activity, which certainly that's been the case in technology, and for most of 2017. But look at energy. There's a lot of names on there that I've mentioned for energy, and again, I'm kind of cutting it short because there's a lot more than this. But so let's start with, why don't we start with energy, because I haven't really gone over any of those charts. I think these really look pretty good. And I think on Friday what you see, you kind of have to take a longer term picture to say that this group hasn't participated in a while. So XLE, has had a nice breakout and it's digesting. Just Thursday was still up, but Friday was kind of an inside day. Same thing for OIH. Same thing for XOP, all breaking out. We did see a lot of heavy call activity towards the end of the week in the offshore drillers once the Trump headline hit about how he's, I guess, favoring the offshore drillers and that we should be doing more of that. So we did see a lot of activity in names like Rig, call buying, ESV. So what's nice about this is they all seem to be, the charts look very similar. SLCA is another one that we saw, which is on my radar for a new long. But you can see that a lot of the charts look the same. So if you don't want that single stock risk, I think XOP is a great way to play the whole group, right? And it's moving. I mentioned that OIH was up, what, 7% last week, or 6.5% last week. So they're certainly moving, and it's the whole group. So sure, the individual names, you could catch maybe a little bit more alpha if you really know those names and you want to follow the aggressive call buying, but the whole group is moving. And the ETFs are also seeing call buying. We saw a nice call buyer in XLE last week. Another name that I find really interesting, which hit on the day that the Trump headlines hit about offshore drilling. Take a look at this BRS. This saw a small call buyer, but something very different. Again, if you're looking for something different, what do these guys do? TRS, in case you're not familiar with them. I was not familiar with them, but part of it is for option activity is looking for new ideas. They provide helicopter transportation to the offshore oil and gas industry, right? So if they're going to be, if you believe that Trump is really going to push ahead with offshore drilling, what a great under the radar name like BRS to play. Again, small order in this one, but it was aggressive. So that's energy. I think it looks great. I think it really has a chance to continue to catch up. Keep an eye on, COG should also be in this list as well. Keep an eye on nat gas. Obviously it's been very cold out, but if it starts to get warm again, maybe that'll be your opportunity to kind of get into this. COG was a trade that I took. I was not able to take out the November high, so it stalled there. I don't think it's completely over yet, but you could see by these candles it tried to go higher 3 days, and it did not close on its highs, so kind of ran out of steam towards the end of the week. But certainly, if you got in when we did, right on the break of these moving averages, it was a really nice profitable trade, and we hit 2 targets in that trade. So now we're playing with the house money in that one. Tech, where to start with tech? I would say, I've got BB on here as one of the first names. Why do I like this one? Because look at the base. I put this on Twitter, and tons of people have opinions about BlackBerry. But bottom line for me is, I think maybe if we move to a 10-year chart here, it'll look a little bit better. But look at the base that this has been making. I don't know if I know of too many charts that have been putting in a base since 1, 2, 3, 4, 5+ years. This thing has been going sideways. And now, if you go into the 1 year, it's now above. It's breaking out of the short term chart. So, I think really this is one of my favorite charts in technology right now, BlackBerry, and it's also a low price stock. It's 1383. If you don't want to mess with the options, you don't necessarily have to, because it's a lower price stock. All right, Micron. That was really the signal, that huge play that we saw on the last day of the year. That was, in technology, it was very quiet last week, but we saw repeat big call buying, which compelled me to take I really wasn't looking to take a trade on the last day of the year when volume was really quiet. But the way they went after Micron a week ago compelled me to go long Micron, and that trade is well in the money at this point. So we could look at that. We'll also look at Square. Square is a trade that we put on last week as well. We've got a new strategy that we're doing this year. So if you're a trend trader and you like to trade options as well, I think part of the challenge is options are a tough way to put together to use a trend trading philosophy. But we've come up with a really good idea on how to do that. And we put together our first trade last week, and then we're going to be giving a members-only webinar on Monday to discuss the management of this trend trade. So Square looks great. We saw some call buying for confirmation, but this thing, big long uptrend, right? And it's just spent a long time, or not a long time, but a while just digesting this big move, and that's sometimes what happens, and it resolved itself to the upside. So I'm personally looking. I'm out in June options, and again have a what's called the limited risk reversal on right now, and I'm looking for this thing to get back to the 52-week highs. Nice MACD crossover in Square. A few other names. Again, I'm not going to go over all these charts, but Splunk, Microsoft, IBM has seen call buying. Twitter saw a lot of call buying in the beginning of the week. Corning, a little bit of Google, and a little bit of Amazon as well. In the materials space, a couple names here. Dow, DuPont. Again, I'm kind of giving myself a pat on the back with this one, but we got, this is what we aim to do at Tribeca Trade Group, is look for the setup before the option activity comes in, before the aggressive call buying, and we're set up and we're ready to go. We've done our research. We may have put a starter position on ahead of time, And Dow DuPont we got into before they started. I sent this chart out to TTG subscribers before the option activity, the aggressive call buying happened last week, and now this is breaking out of a several month sideways base. So again, mission accomplished with this one. Similarly, one trade that we put on last week, heavy call buying in fiat. Look at this thing go out of a, the reason why I bring up fiat now is because when I say multi-month sideways base, that's what we had in Fiat Chrysler, and this looked too good to be true last week. And I went long on the break of the sideways pattern, and huge profits for this trade last week. All right, so let me give you another trade idea for this week, and then this is just about, we're getting towards the end of the video, but kind of goes with this theme that I've been talking about, is this multi-month sideways base. And this is Lockheed Martin, and on Friday we saw call buying in this just as it's starting to break out. So really nice looking, in my opinion, breakout. One name that I have on my radar for next week that I really like to set up. We haven't really seen any aggressive call buying, but it looks very similar to what happened in Lockheed towards the end of the week. We're right at big uptrend and a multi-month sideways pattern. Watch right around, I would say, the recent high, 192.41 for confirmation of a breakout. If we happen to see an aggressive call buyer, I will not be hesitating. I will be going long Raytheon. Again, another area that did not really break out and perform like the rest of the overall market last week. All right, so I could go on and on with names, but I think we covered enough. One name in gold, if you're looking for something a little bit different. First, let's look at the gold chart. I always like to look at the commodity, very commodity sensitive names. We want to look at the underlying commodity first, just like with FCX, you want to look at copper. So with gold, gold moving out, I'm still, think it's a very sideways looking chart for gold. Maybe you can keep going to this purple line up here. But one name that looks particularly interesting that saw call buying last week is Newmont. So I drew a trend line in here, a downward trend line. Notice that it's broken the downward trend line and moving up here. So I think the chart looks pretty good here. Also, if you've got a lot of tech-heavy names in your portfolio or even energy materials, what have you, I think having a gold miner in there creates really nice diversification benefits for you. So either in the stock or in a longer-term options play. I did go long Newmont towards the end of last week because I really like that diversification benefit, as well as I like the chart setup as well. So so that's the end of today's video. Again, a little bit longer than normal video, but a lot to cover. That's why I put these videos out, because I tweet a lot of information out, but you can only really put so much in a tweet. You can't really put emotion unless you want to put all caps, I guess, in a tweet. So so thanks for watching today's video. If you like this type of analysis, this is what we do all day long, every day in the Tribeca Trade Room. Check us out, tribecatradegroup.com. If you're looking for a trial, you can email me directly or email info@tribecatradegroup.com, and I'm happy to set you up with a couple-day trial just to check it out, and we can go from there. All right, guys, thanks for watching, and enjoy the rest of your weekend.